Ladies and gentlemen, breaking financial updates tonight from Baghdad. While the Iraqi dinar officially trades at 1,310 per US dollar, wild rumors of a dramatic revaluation are sweeping across social media and speculative investor circles. Some claim the dinar could jump to parity with the US dollar or even higher, an idea capturing global attention. But experts and financial analysts are now sounding the alarm. These rumors could be deeply misleading, not only for Iraqis but also for global currency watchers and investors betting on emerging markets. So, what's fact, what's fiction, and what should the world really be paying attention to? Let's break it down. Pushpin, the source of the rumors. The latest wave of speculation began on foreign investment forums and social platforms. Influencers and self-styled currency gurus have suggested Iraq is preparing a surprise revaluation, RV, that would instantly transform the dinar into one of the world's strongest currencies. These claims often cite Iraq's oil wealth as justification. With proven reserves exceeding 145 billion barrels, Iraq is indeed an energy giant. But analysts caution, oil reserves alone cannot magically multiply the value of a currency overnight. Bank official exchange rate reality. Right now, the facts are clear. Official CBI rate, 1 US dollar equals 1,310 IQD. Parallel market rate, between 1,420 to 1,450 IQD per USD, depending on demand. No official announcement has been made regarding a revaluation. In fact, the Central Bank of Iraq CBI has recently focused on cutting excess dinar supply to curb inflation, cracking down on dollar smuggling networks, expanding digital payments to reduce reliance on cash, working with the U.S. Federal Reserve to ensure compliance with international banking rules. Nowhere in official policy statements has a $1 plus revaluation been mentioned. Globe showing Europe-Africa why the rumors attract global attention. Even outside Iraq, investors keep an eye on the dinar because speculative investments. Many hold dinar as a long-shot bet, hoping for a surprise revaluation. Regional influence. Iraq's stability affects the Middle East economy, especially trade with Turkey, Iran, and the Gulf. Oil market dependence. Since Iraq is OPEC's second-largest producer, shifts in currency policy could ripple through global oil contracts. But global currency watchers warn that exaggerated revaluation rumors can distort expectations, causing speculative buying frenzies without real economic basis. Magnifying glass tilted right economic reality check. For a revaluation of the kind being discussed online, say 1 dinar equals $1, Iraq would need foreign reserves in the hundreds of trillions of dollars to cover the existing money supply, massive fiscal reform, reducing corruption and diversifying beyond oil, stable inflation and political unity, which Iraq currently lacks. Instead, Iraq's central bank holds around $100 billion in reserves, strong for stability, but nowhere near what's needed to back such a radical shift. This makes an overnight jump in value not just unlikely, but economically impossible. Moneybag, who benefits from the rumors? Experts point out that revaluation rumors are often spread by groups who benefit financially. Dinar resellers who profit from selling banknotes at marked-up prices to foreign speculators. Influencers who build large followings by feeding insider news of an imminent RV. Black market traders who thrive on uncertainty and use hype to raise street prices. Ordinary Iraqi citizens, meanwhile, gain nothing from these rumors. They continue to struggle with inflation, high import costs, and dual exchange rates that make daily life harder. Stop sign warnings from economists. Prominent analysts have issued sharp warnings. The dinar will not jump to $1.37 or even 10 cents overnight. Expectations of instant wealth are dangerous and could mislead investors globally. Iraq may see gradual strengthening if reforms succeed, but that would take years, not days. Instead of chasing speculation, experts urge investors to watch for CBI monetary policy adjustments, progress in digital financial systems, oil price trends, and fiscal reforms. These are the real indicators of Iraq's future currency direction. Crystal ball, the likely future. Three scenarios dominate economic forecasts. Status quo stability. Dinar remains pegged at 1,310 per USD with small fluctuations. Gradual appreciation. If reforms succeed, Iraq could slowly strengthen the dinar, perhaps moving toward 1,250 or 1,200 over time. Controlled devaluation. If pressures mount, the CBI might be forced to weaken the dinar slightly, widening the street gap further. But all experts agree. A sudden, dramatic revaluation is fantasy, not policy. Studio microphone, closing statement. Ladies and gentlemen, tonight's takeaway is clear. The Iraqi dinar holds firm at 1,310 per dollar, with no official move toward a massive revaluation. The silence from Baghdad is deliberate, and the rumors online are misleading. Investors around the globe must separate fact from fiction. Iraq is pursuing gradual reform, not overnight miracles. Oil wealth, policy changes, and global market conditions will shape the dinar's future. But the dream of a sudden revaluation making millionaires overnight remains just that, a dream. For now, patience, realism, and caution are the only wise investments. Ladies and gentlemen, welcome back. In part 1, we reported the breaking updates. The Iraqi dinar holds steady at 1,310 per dollar, despite explosive rumors of a dramatic revaluation. In this second part, we'll dive much deeper. We'll explore the history behind these rumors, how past events fuel speculation, the role of the black market, and why global investors need to exercise extreme caution. This is not just about Iraq. It's about how financial myths spread, how misinformation travels faster than facts, and how ordinary people can be misled into making risky bets with their hard-earned money. Mantelpiece Clock 1. The origins of the revaluation dream. The story of dinar speculation goes back nearly 2 decades. 2003 post-invasion currency reform. After the fall of Saddam Hussein, Iraq introduced a new currency to replace the old notes that bore Saddam's image. The new Iraqi dinar, IQD, was pegged to the US dollar at varying rates. Investors outside Iraq began buying dinar notes, believing that once Iraq stabilized, the dinar would return to pre-war levels. Historical misconception. Before 1990, one IQD was worth around $3.20. Speculators used this as evidence that the dinar could one day return to that value. But economists point out, Iraq's current money supply, debt levels, and oil dependency make such a return impossible without hyperdeflationary measures that would devastate the domestic economy. The role of dinar gurus. Over time, online communities grew around the belief that a secret, massive revaluation was imminent. These groups often promise overnight wealth, sometimes even attaching dates like this weekend or next month. Bank 2. The central bank's actual policy. The Central Bank of Iraq, CBI, is clear in its official statements. Its mandate is to maintain price stability and manage inflation. It uses currency auctions to balance demand for dollars and maintain the official peg. It recently reduced currency in circulation and imposed stricter banking compliance rules to align with U.S. Federal Reserve oversight. At no point has the CBI mentioned an overnight revaluation. Instead, its tools are gradual, adjusting the peg slightly, like the 2021 change from 1,190 1,460 IQD, supporting digital payment systems to reduce dependence on physical cash. Fighting corruption in currency transfers. This is far from the overnight millionaire narrative spread online. Chart increasing with Yen 3. The black market and the street reality. The gap between the official rate, 1,310 IQD, and the parallel market rate, 1,420 to 1,470 IQD, is where much of the tension lies. Why the gap exists. Shortages of physical US dollars. Restrictions on international transfers. Demand from traders who import goods. Impact on citizens. Importers pay more for goods. Prices rise in local markets. Salaries fixed in dinars lose purchasing power. This environment creates fertile ground for speculation. When citizens see the black market rising, they're more likely to believe rumors of a coming reset. Globe showing America's 4. Global investor attention. Why do international investors, even outside Iraq, care about these rumors? Speculative buying. Dinar banknotes are sold worldwide, often at huge markups, with claims of holding them until the RV. Comparisons with other currencies. Investors compare the dinar to Vietnam's dong, or even Kuwait's dinar, hoping for a similar trajectory. Dollar dominance. In a world where the US dollar remains king, many look for the next big currency shift, and Iraq's oil wealth seems like a tempting story. But economists stress, Iraq's fundamentals are not comparable to Kuwait, whose tiny population and massive oil revenues support a strong dinar. Chart decreasing 5. Why a sudden revaluation is impossible. For Iraq to suddenly revalue its currency to even 10 cents per IQD, it would need trillions in reserves. To revalue to $1, it would need hundreds of trillions, more than the entire global money supply. Iraq's current reserves, around 100 billion US dollars. Money in circulation, over 100 trillion IQD. The math doesn't work. Overnight revaluation would bankrupt the state, collapse exports, and trigger chaos. Magnifying glass tilted left 6. Who spreads these rumors, and why? Several groups benefit. Currency resellers, who profit by selling dinar notes abroad. Influencers, who gain followers by promising insider knowledge. Black market operators, who use hype to justify higher exchange rates. Ordinary Iraqis, meanwhile, suffer from higher living costs and shattered trust in the financial system. Crystal Ball 7. The real future of the dinar. Instead of a miracle RV, experts see 3 realistic paths. Gradual strengthening if oil prices stay high, reforms succeed, and corruption is reduced. The dinar may slowly appreciate over time to 1,250 or 1,200. Stability at current levels. The peg remains around 1,310, with the black market fluctuating. Controlled weakening. If pressures mount, the official rate could be adjusted weaker, widening the gap. No credible economist supports the overnight millionaire RV theory. Stop sign 8. Investor warnings. Don't be misled. Analysts worldwide stress. Beware of scams tied to dinar sales. Understand the math, reserves versus money supply. Watch real signals, reforms, oil prices, and CBI policy. The dinar may indeed strengthen gradually in the coming years, but chasing rumors of instant wealth is a financial trap. Studio microphone, closing statement. Ladies and gentlemen, the lesson here is simple. Facts, not fantasies. The Iraqi dinar today is pegged at 1,310 per US dollar, and no official body has announced a revaluation. The revaluation dream is powerful, but without real economic fundamentals, it's just that, a dream. Investors worldwide are urged to stay cautious, verify information, and never base financial decisions on rumors. Iraq's currency future will be shaped by reform, oil, and global economics, not speculation. Patience, realism, and clear analysis remain the strongest investments.